All right, yields up, markets down, metals and miners down, but outperform. That's the way I would summarize it. But really, it's all about the yields and the fact that the markets kind of puked. This is the kind of day I was looking for. I thought we'd have a small bounce. As you can see, I actually left all my annotations in, but I thought we'd have a small bounce, maybe, especially after this candle, sort of put up a small fight across the other indices too. But eventually I thought we'd come back down, but we've done it early. I mean, for me, this is Christmas early. My account went down, but that's what I wanted. I've got basically over 50% in cash, or just about 50% in cash. And when you got that much in cash, trust me, you want it to go down. But it's funny how when it goes down, it's doing exactly what you want. You can still see your account go down too. And it kind of hurts because you don't feel fully rewarded for sort of getting the direction right. But vice versa. When it goes up, you're annoyed you didn't go all in. And that's why, I mean, I've been doing this for a while, so I'm used to the feeling. I'm kind of numb to it, but I'm playing the long-term game, but I do swing trade my investment. So, I mean, that's kind of comes with the territory. But anyway, today yields up, markets down pretty hard. It's basically 2% for the S&P, 2.5 for the Nasdaq, and 3 for the Russell. Let's check it out. S&P, look at that, beautiful. Closed at low of day, by the way, unlike the miners and the metals, just to be specific to gold and silver, but I'll get to that later. I think first up is the ascending support on the S&P. This, by the way, is null and void because this kind of a low of day close, it kind of, we could bounce from this ascending, but I think this is no longer valid. I'm looking for, and again, I don't care to be, I mean, this move happened early, so I don't consider it wrong either. So I sort of expected to come back down here, bounce a little bit, and then go back down. To me, this was pretty rough selling. It was a different kind of day. I think it's the first time we've had a day like this so far this year. And I could just feel it. You could feel this sort of the tick move down in the S&P, and I could just see all the other ETFs just go down. It was like heavy volume selling in the last 10 minutes. It's funny how as soon as it's in the last 10 minutes, the algorithms just kick in, and I could feel the push down. So I don't know, it just felt different. So the S&P, yeah, I expect to go back down here, bounce, and maybe go lower, basically lower though. Before I thought we'd go sideways a bit, maybe mount a small advance here, but fail because I thought ultimately we'd go lower. But now I'm even more adamant that we go lower. It's happening earlier, which is good because this market doesn't belong up here. I've been saying it for a while. The Nasdaq, yeah, I'm gonna have to delete all these because it's happened early, but I don't really know where support is on the Nasdaq here. It's again, this is too steep to count. We've already lost it. You can see that wouldn't have counted. Basically, we lost support and closed. I mean, the support was really this line here, 297-ish, where we double bottom and straight away just opened below it. That's also quite significant. Closed at low of day. For me, we're going at least here, 288. That looks like sort of temporary pit stop support, but nothing serious. I don't know. I think we're moving lower. I think you may actually determine support in either specific stocks that make the Nasdaq, like Google, like Apple, all these ones. So once they start to find support, then the Nasdaq will, and that'll influence other markets. But other markets also have their own support. So maybe when the S&P's here, there's a slight relief. So I'm not going to draw a line if there's no obvious one for me. I'm just going to leave it so it's clear. So I don't have lines that don't mean anything. That's just polluting myself, really. So if I had to draw one, I'd draw on here, but I'm not going to actually keep it nice and fresh. I'll count on the other charts that do have more obvious lines. So that's the Nasdaq. That's the S&P. Let's look at the Dow Jones. I think it's a bit more obvious. We've got sort of two support horizontal lines. Nothing really. This ascending one here doesn't work anymore. I actually deleted that one a few hours ago. I remember. I think I had one like this straight away negated. Look at this. Closed far below this support here. This was really temporary support. I deleted it actually, I think a few days ago, but now we've got this here, sort of 33,000, let's say, and just below sort of support. And then the all-time low of this area since actually December last year. And I'm going to call that 32,500, 600. So between 32,600 and 33,000-ish, you've got support on the Dow Jones. I think we're going to test 32,600, and let's look for close below that, and then bam, all the way down here we should go. You know what I mean? We sort of lose this, and then the market says, okay, we're obviously not ready to keep going up. And oh yeah, by the way, yields are going up, and there's a lot of reason for the market to go down. I've always said that geopolitics, macroeconomics, is just the market starts to move down and people start to justify it. But for me, it's yields, which equals the macroeconomic conditions, the debt, the spending, just everything, the inflation, and rates going up to kill it, to stop inflation. So, and the market sort of front running the Fed, you could almost say the market's going up, the 2-year yield. I'll get to that later, but that's, for me, that's what's pushing the markets down. I know there was a lot of geopolitics and Russia sort of abandoning the strategic offensive arms treaty, but for me, it's an excuse for what the market would have done anyway. So yeah, Dow Jones, I see a bit of support down here. And I think eventually, yeah, we'll go there, maybe bounce, but basically close below it at some point and then indicate the next move down. There will be a bounce. Russell, I don't see too much obvious support. If you had to, 183, yeah. I mean, I do think the ascending support will be the most credible one on the way down. By that, I mean the one that is strongest, but a 5% move down is not happening tomorrow. It may even take several days. But I'm not going to draw a trend line. Again, if I had to, it'd sort of be this one here, which kind of looks like the one I would draw for the Nasdaq if I had to. But I'm not going to. I'll just leave it because this feels like a new sort of direction. Let's see how far we go. The one on the S&P, I think, is valid. So I'll leave it sort of naked for now. But I think you get my drift. I expect us to go lower. I expected us to go lower anyway. It's just happened sooner, but sort of, we don't go down in one straight line. We'll sort of drift low. We might have another drop down to here, for example, on the Russell 180, then a bounce back up. So form support will become resistance on the way up. If we do bounce, we might as well draw this, for example, something like this. But, the way it's happening right now, it could honestly just be a lot quicker. But still, for me, it's down. So very happy to see the move down. I've been positioned for that for a long time. So I'd hate to have wanted to have had to chase my miners on the way up. It's just a horrible feeling. The VIX actually is finally acting more like the VIX should. So look at this, just totally open at that resistance, closed way beyond it, very bullish finally. If you zoom out, and I did this, I think, in the last 1 or 2 videos, just remember where you are. We're down here with everything we know. And I think we're going to the top of this ascending line. I think we're first going to get to 26. I've mentioned the number 26 a few times on the VIX. We need to go there. And, we might get just before it. We might sort of, I don't know, 25 or 25.50 and fail. But if you hit 25 or 25.50, that's the same as 26. I think we're going to have to go for 26. And to be honest, it's the next. I might as well delete this because we achieved it. We opened at that level. I mean, yeah, we could have a little test at 24, but yeah, for me, we're going to go up here. Another massive move up, maybe not straight away, but whether you have to wait 1 or 2 weeks, it's the same thing. If you're a long-term trader, or position yourself, it shouldn't matter too much. So that's the markets. Let's go to yields. I can't wait to get to yields. Look at this. The 1 year, just new highs, beautiful. Close at the new high too. I don't need to say anything else, just very, very bullish on the yields. The 2 year, way more important. Look at that. We closed at the second last level. I think this makes sense, this resistance. I had it there for a while. 73-ish. Closed at a high of day, closed at the resistance. I mean, look at this here. Just like I thought with the market, I thought we'd retrace a bit. So the market, I thought, would go up. And yields, I thought, would go down just for a little bit and eventually make that move. And, it's just done it early. It's just done it way too early. But I'm happy about that. So let's see, is it straight away tomorrow or is it sort of sideways? Because we already did quite a bit today, but eventually up again. And then things should get crazy up here. I think people are starting to finally pay attention. I think that's what the move was today. People realizing, oh, wait a minute, yields are going up. This is supposed to be bad. And actually, yes, it is bad. 5 year, same thing, closed the high of day, just one massive candle up. Beautiful. 10 year, same thing, closed above resistance this time. Also quite meaningful stuff. 30 year closed at the resistance. Once we close above, I mean, that's it. They've all closed above their horizontal and The next resistance is either the all-time high, and you know what I mean by that, just up here, or the second last all-time high for all of them. You know, horizontal has been breached. And then let's look at the EU yields. Look at that, closed at absolute triple top high. I mean, just as triple bottoms very rarely hold, the triple top very rarely hold too. So it should just break through. I don't know if we're going to have another little handle, or, you know, was this the cup and then this the handle? But whatever, we're going up. It's pretty much, you can never say something's guaranteed, but this is pretty much guaranteed, because it's not like they're going to all of a sudden, you know, stop spending money and start paying back debt and all that. So for me, this is pretty much guaranteed. And okay, the German 10 years, the same thing. The French, identical. The Italian should be a little behind, but, you know, we're there. I mean, if you really want to be strict about it, it still has to take this descending. But, you know, if the EU 10-year goes up, this will close there and just be one day behind, hitting its high. And the British, the one that came down the most, look at this, the 10-year going back up, just about to test its little horizontal line. You don't have to be too strict. But the 30 is already there. It's already closed above it. For me, that's pretty important stuff. I know you think that the British 30-year is not important to the US markets, but I think it is, because that's the sort of the most resilient bond in Europe, if you want to call Britain in Europe. And if that one looks like it's taken out, for me, this is the last resistance before, you know, testing the highs. Okay, there'll be one line, whoops, maybe one line before. But if the British yields are starting to make, you know, starting to run for their new highs, I mean, they're all guaranteed to be doing the same thing. For me, this is the bigger story. I said it for a long time, and I think it is finally coming true to a lot more market participants, because as we go up, I feel like the markets are reacting to yields going up. I was watching it zoomed in today, several different sectors on the charts, and it just felt like the yields were going up and then everything else was going down. The dollar didn't move as much as I thought it would, but it still was up and it's still following yields. And it's just also underperforming yields, but it's following in the same direction. And that's been the case for this whole move, except maybe these 2 days, but it's basically been the same thing. Like, all the other yields are at their horizontal or above it. The dollar hasn't touched it yet. And it's relatively speaking the same sort of move. So for me, as yields go up to test their records, like the 2-year and all this, as they move up, I think the dollar will start to move up and test this little 105.5. And then we want to close above 106. And then I've said this about dollar, we're going to have a lot more resistance, 106, and then the next one's here, and then the next one's there. So I don't think it's going to take a lot for the dollar to make new highs or test its old highs are here, 114. So I do think that the dollar will suffer on the way up, or at least meet a lot of resistance, unlike yields. But still, you know, we're having some days where it's starting to get a bit scary. You know, minus 3% day, minus 2% day is pretty volatile stuff. And you can't discount the, you know, the possibility that the dollar just starts to move up pretty aggressively. So I'm still bullish the dollar. Commodities, bit of whipsaw in the different classes. Copper up, didn't really understand that. You got the markets down, you got metals basically down, you know, dollar up, yields up, but okay, fine. Maybe some China story, maybe some supply and demand. Maybe one of you guys know. I didn't really hear anything, but I didn't look either. In this case, yeah, it did go up. I do expect it to come back down and flush lower. So I do expect it to not be able to take out this high. I could obviously be wrong, but I just feel like it's done a bit of a move and it should come down with everything else. I didn't really understand why it went up, actually. Natural gas, I have no words. I mean, okay, today, you know, the markets were down, commodities should be down, yields up, dollar up, so it kind of makes sense, natural gas. I think there was a supply and demand report out just saying there's too much supply. That would definitely make sense. But still, this is just way oversold for me. I don't know, it depends if any of you guys are in it. I don't know how you're trading it. For me, I would just take a long-term stance on it. buy and hold and give yourself distance between your next buy, whether it's $2 or 151 or maybe 170, I don't know. I think I placed this line down here to show where generally the low is, but you can see it's already really come down. So I don't know who's trading. If one of you guys are trading natural gas, let me know. I'm not really in it. I'm in one particular stock, which was basically flat today, despite this being down 5%. So it doesn't really suffer too much with the price action. But I think natural gas is a buy and hold for several months at least, and you'll get it in the 4s or 5s. So this is just more of a gift if you're into that. Oil down a little bit, like the rest of the commodity class, although it was a bit mixed across the commodity class. Middle of the range, nothing to say. It's not a buy, it's not a sell. It's more of a buy than a sell, if you ask me, for long-term perspective. We could come lower, we could come lower, especially if the markets come lower, especially in a sort of panicky way. You could see oil just come down, gold, silver is one of those crash sort of market days could come. But yeah, for now, nothing too crazy, just sideways down. Let's go to gold and silver. Let me just reset the chart here. So yeah, I thought we'd bounce a little bit and come down like the markets, but like the markets, it just moved lower straight away. So it was nice to see, but I'll tell you what, gold outperformed the markets. It's reset now for the day, but it really was, I think it was almost green at some point, but it wasn't really down that much at all. So for me, it outperformed the markets. You can see it didn't take out its old low, unlike the markets, flushing to sort of new lows. This was just, it's sort of consolidating around 1830. So for me, 1830 remains support, and then underneath that, 1800 is the next support. So I didn't change my point of view there. But will it just grind sideways, or will we actually move lower? We'll have to see. But it did outperform. But if yields and the dollar go up, kind of has to go down. I don't think gold is ready to go up with the dollar yet. There are moments where that happens, and that can last several weeks, but I don't think we're there yet. But you can see it's relatively oversold, and today at least it was outperforming the markets. So that's interesting. Take note of. Silver also, despite bouncing already a little bit, you'd expect it to have been more red today, but it wasn't. In fact, I think it was green. But either way, it wasn't green by much if it was green, but it wasn't really down as you would expect it to be. When you got the Russell down 3%, Nasdaq down 2%, yields up, dollar up, you'd expect silver to be down like 2% or something at least, but it wasn't. So I just feel like there was a bit of strength in the metals, in the precious metals today. So let's see. I mean, I'm looking to gold for direction. If gold looks like it's going to go flush 1830 and go to 1800, then silver has to follow. This is where I think silver will go. This horizontal line here, 21, but it kind of needs to go down with gold for that. And I didn't see that sort of I don't know, momentum today. The miners, okay, they were down 1 to 2% today. So that kind of followed the markets more than the metal. That's also interesting, right? So the metals outperformed the markets, but the miners followed the markets more than the metal. It's interesting. You've got to pay attention to this stuff, because what a bullish signal would be for me is if the miners outperform the metal and the metal outperforms the market. Basically, the precious metals and their equities sort of up on a down day. That wasn't the case today, which means if the markets go down, which they look like they're ready to continue doing, you can expect the miners to go down regardless of what the metals do. So I think the metals sort of softened the blow, gold and silver being mostly unchanged, that softened the blow for the miners. But had they sort of been down, 0.5%, 1%, then you would have a sort of -4 or 5% day for the miners. So I still see support here. I did buy a little bit of miners. There were some, I think there were 5 miners I bought because I quite simply didn't own enough of those, and I wanted to spread my portfolio a little bit, but I didn't sell any against it. So it was kind of a buying day for me. That was because I saw the miners as relatively strong, but mainly because I saw gold and silver hold their own, and I just wanted to buy a bit more. I bought essentially the same, you can see it here, the same zone as I already bought. I've sort of bought this range twice lightly. So now it's sort of a strong buy. So I've bought this zone. I'm not buying any more here. For me to buy the miners, it would have to go to the next level. So I'm talking about below 27 and the GDX, this horizontal line, essentially. And then GDXJ, it would have to be this 33, But I do expect, and you can see I also thought this would go lower, but not straight away, just like the markets. I can delete these actually. They're basically already down. Will they go lower? If they do, the next zone here on the GDX, and it's not that far away now, but sort of here on the GDXJ, coinciding with the descending support. That's my take on the markets, on most of the sectors. I will just finish by showing you a one stock that I used to cover that I didn't for a while, and I just noticed Credit Suisse back in the picture. It, for the first time closed, what was it, the first time, just about closed below $3, 292, and I was saying wait till the day that this closes below $3, and it was on a market crash. Yes, there was news out that it was being investigated for saying that it had secured liquidity or whatever it was, just something that the CEO said. Any excuse, but now we've closed below 3. Think about it. You've got the geopolitics, you've got yields going up. Just throw in there something like Credit Suisse maybe going bankrupt. What if its stock just starts to collapse now? You just got so many black swans. And I was saying this on the way up when everything looked beautiful, and now we've had one move down, one down day, and you see the panic. I mean, look at my screen here, just all the different sectors are red, heavy. This is 3D printing, just destroyed. Okay, I'm starting to do a space sector because I'm quite interested in, mining asteroids. I think you make the right choice there, you easily retire it. But okay, besides the multi-metals I've got here, like Rio Tinto, Freeport McMoran, okay, ignore these sort of metals, let's say. But otherwise, look, even uranium, which I will start to cover, by the way, soon. Uranium destroyed. Oil down pretty hard. Biotech slaughtered. Large caps, just everything was down. Some of these stocks here, I mean, look at Google. That one's going to influence the Nasdaq on the way down. Intel, just straight away, triple flush coming, all-time low. Microsoft, etc., AMD, they've all got similar looking charts. They've had a nice move up, but look how much we've come down already on some of these. NVDA doesn't have earnings tomorrow, I think. Apple is about to lose that support. That will take down the market. Disney, they've had their nice move up. Everyone chased. Retail was all in at the top as usual, and now it starts to look bad. Staircase down. Just 1 or 2 down days just negates like a whole 1 or 2 weeks of up move. Okay, some of these are quite strong still, but we start to lose support. Look at Tesla. We lose 188, straight back down to 160. So yeah, and just to show you that across the board, it was sort of selling. And that's what reminds me of a different kind of day. It's not like it was down 1% or 0.5%. This was down 2 or 3%, and it was across the board selling. But anyway, metals outperformed Bitcoin, by the way. Let's finish very quickly on Bitcoin. That was interesting. I think that was quite green at one point today before the yield started to really charge and the market starts to dive. Again, Bitcoin follows the markets. It's outperforming a bit like gold and silver, to be honest. I mean, I know down 2.5% is notable stuff, but it was kind of outperforming. We're sort of still flagging near our highs. I mean, today we touched the high. We were above 25,000 today on Bitcoin. So, whereas the market just opens down, just flushes and closes at low of day. So Bitcoin's still outperforming, but of course, if the market goes down, you can expect Bitcoin just forced to go back down too. So I'll leave it there for now. Very exciting stuff. Let's see what happens tomorrow. Is it continuation? Is there a bit of a relief rally, like sideways up? Or is this just going to be several days of downward moves whilst we watch yields go up? I don't know. Let me know